Markets closed slightly in the red, but definitely not as bad as they first started off with in the first hour. What's going on, guys? It's Ricky with TechBot Solutions here with a super quick market update. I want to quickly share my screen. NASDAQ market down a little bit over 0.5%, but if you see from where we were to where we actually closed at, we kind of just closed at old support levels during the extended hours are now acting as new resistance levels. A V-shaped recovery. You would think that good news actually came out. Well, again, we talked about it in today's earlier video. The difference between today's sell-off right at market open to yesterday's sell-off is that yesterday it took all day for the NASDAQ market to pretty much sell off about 1.1%. Today, it was within the first 1 hour that it took the market to sell off 1.6%, a simply sharper sell-off. Anytime, and again, this is why I made the video that I did earlier today, anytime that you see an aggressive sell-off like that, you tend to see some form of like V-shaped recovery, or what they like to call a dead cat bounce. Now, could we have expected for it to recover like this? No, definitely not. And you would expect, based off of what was shared with the Fed minutes, right? That was released today. Fed minutes are out. Fed thinks that inflation risk is higher than unemployment risk. And that was the whole point, right? Unemployment, once we saw one of the non-farm payrolls, we saw that the unemployment risk was getting greater. And remember, the Federal Reserve has two main focuses: maximum employment, job stability, and also controlling our inflation rate, right? This is how they control our monetary policy and their main variables or levers that they try to focus on. With that being said, that was a big concern that recently came about because the PPI report, although core CPI and CPI as a whole came in kind of as expected or a little bit lower than what was expected, PPI came in much higher than what was expected, showcasing that inflation on the producing side of things is again growing at a faster rate than what was expected. And this is just shedding some light of what could be the tone on Friday, right? The Jackson Hole meeting, which is the whole reason that the market began to de-risk yesterday. So now the Fed is saying that they think that the risk of inflation is simply greater than the risk of unemployment. And if that's the case, if their main focus is inflation, then inflation came in higher. And then at that point, that would not justify the Federal Reserve to cut rates in the month of September. Remember, that is still 4 weeks away. There's a lot of data that we still have to take in. So remember, as markets try to predict what is expected or set to happen, remember that we are still 4 weeks away. We still have a whole nother CPI report, a whole nother PPI report before they even vote for the next FOMC rate decision. So please just make sure that you are aware of that. It also thinks that the tariff impact could take some time. This is not bullish language. Let's wait for Friday's speech for more clarity in rate cuts and QE, which is quantitative easing. So the whole idea behind that is that we're all focused and waiting for the clarity that's supposed to come this Friday for the Jackson Hole meeting. For those that do not know, I will be live streaming this at 10 a.m. Eastern time, which is 30 minutes after the market opens. All you have to do is subscribe to the channel. The thing that I quickly want to also shed some light on is, I think this is what's going to be the title of my video. I want to talk about Palantir. And I'm just using Palantir as an example because it's one of the most how do I want to call it? It's one of the trendiest stocks this year, right? So Palantir hit lows of $42 today. 142, my apologies, not 42. 142. It is now trading after market hours at 159, but really closed at 156. That is, at the current level, about almost a 12% recovery, if I'm not mistaken, from the current lows to the current highs, about a 12% recovery. The question that I want you to ask yourself is, first off, I don't want you to try to predict and take a trade now that you later end up regretting. That's not the point of this video. But I want to talk about both sides. Some people view this as an amazing dip buy opportunity. They think that on Friday, the Federal Reserve is going to announce that they're eager to cut rates, which should be bullish for the market, and therefore allowing the market to possibly make new highs. If that's the case, why wouldn't you want to buy the dip into Palantir, right? That's the idea. That's the dream that they're trying to sell you. But you can't be completely against it because remember, markets are incredibly bullish. Markets have been more bullish than they have been bearish. And what would be the potential recovery? Well, from current levels, right around 159, If market does make a full recovery, I'm sorry, not market, but if PLTR does make a full recovery, one of the trendiest stocks, that's an 18, almost 19% ROI. And that's just if it goes back to previous highs. We all know that Palantir is aiming for that $200 price level. So if it goes back up to if it goes to $200, that's a 25% return. That's insane, right? That's a huge ROI potential. Direction is in your favor. I want to talk about all the pros. Direction is in your favor. Price momentum has been in your favor for 2025. It's been a very trendy and favorable stock based off of its amazing performance. Great. At what risk? This is the question that, again, it's kind of the pickle that we're all in. Do we want to buy into the dip, or do we think that even for a 25%, ROI, it might not even be worth the risk? Well, what do you mean, Ricky? Okay, that's great if it goes up to, 200. But at what risk? If we buy now, and what if it retraces just back to the same lows that we were at today? That's an 8.8% sell-off. If it goes back down to, previous resistance range, now new support right around 126, that's about an 18% drop. That would be about a 1-for-1 ratio. If we pull back to the moving average, that's a 30% retracement. If we go back to April lows, right, that's during the trade war, that would be a 57% sell-off. So at what point is the risk too high, right? We obviously know that Palantir has an amazing story. It's AI focused, and it's one of the trendiest stocks for 2025. But a lot of you guys also know is that Palantir trades at a crazy multiple, right? If you look at its PE ratio, which again gets pointed at very often, it's trading at 484 times its earnings. It's a company that produces less than $1 billion in net income, yet it's worth over $370 billion. Now, I had a conversation with some people earlier today, and I had a conversation with a buddy off of social media, and he brought up a really good point. It's that, well, Palantir just has a big market to still capitalize on, right? The total available market is still so big versus what Palantir has captured. Now, the way that this is explained to me, and the way that kind of sounds like to me, is kind of like, have you seen that meme of a donkey with a fishing pole wrapped around him and a carrot hung right in front of him? It's like, at what point do you stop chasing the possibility or potential of a company and actually just acknowledge what's in front of you? If you look at the company versus what it's valued at versus what it's producing, there's a huge discrepancy, right? Some have even listed Palantir as one of the most overvalued companies ever. It's a company that would have to see a 50% growth year over year for the next 5 years to just justify its current valuation. Its current valuation. So then at what point do you say, okay, enough is enough? It's not just about projected value. Then when do you sell? Because if all you're ever thinking of is, well, it has the potential to amass this valuation, but it hasn't, and it's not, and it isn't, then when do you focus on what it currently is doing? Because then at that point, that is the concern, right? That is the risk. Now, I get it. As a trade, when direction is favorable, it makes sense to want to trade Palantir. I 100% agree, and I can see why everyone would want to trade Palantir. Now, investing into Palantir long-term at this price level, to me, just is challenging to make sense of. I think that's the best way that I can put it. There is nothing wrong with trading an overhyped up stock because your intentions are short term, right? You get in, you get out, you maybe get in at 160, you sell at 200, you make your money and you bounce. But imagine this. Imagine you're someone that truly does believe in Palantir, rightfully so, right? The AI market is here. But if we begin to see a shift, just like we've recently seen in the past few days, I think Palantir has showed us how overvalued and how aggressive it can sell off, right? In just 1 week, It lost about 25% of its value. For that 25% of value that it lost for everyone that bought at 189, 190, it has to recapture 33% of an ROI just to get back to that level. So that is my question to you. Is it worth the risk? There's no right or wrong answer because, I might be a little bit more conservative when it comes down to wanting to invest in companies versus you. Or you might just be also even more conservative than me or riskier than me. So I'm not here to say that you should never invest in companies like Palantir because that would be silly and naive. I'm just here to make you aware of the pros and the cons, the timeline, your intentions, to not be afraid to take advantage of, an intraday play or, a swing trade for something that can yield a 25% return. Make your money. That's why we're all here. That'd be so silly for me to say like, no, you can't make money going long on Palantir. Well, the proof is in the pudding, right? The past year itself, it's had one of the best ROIs in history. With that being said, when is enough enough? Just something to take into consideration, especially as we approach such a critical point. Friday, right? With the Jackson Hole meeting. If they do begin to cut rates and markets do begin to thrive, I would expect Palantir to do very well. I wouldn't be surprised if I would go long on Palantir for that day. But that's such a different approach than going long on Palantir as an investment at these levels. In my opinion, and in just my opinion, the risk of buying Palantir at 160 is just too high. The retracement potential is just too high long term, right? Where I can wait for a pullback, I can wait for a deal to present itself, where I can more calmly justify not overpaying as much for Palantir. And in my opinion, that just means that I have to be a little bit more patient. But again, in a market condition where if you have a good story and good price momentum, things can continue to push. And who knows? Palantir, maybe a few months from now, can be trading north of $200, and we'll see. And again, there's nothing wrong with that. The thing is that you just acknowledge the profit potential, as there's definitely some there, but also the risk potential, right? It doesn't make you a bad investor to have criteria and to not feel comfortable investing in some companies that just come, in your opinion, of too great of a risk, just like Warren Buffett, right? Warren Buffett doesn't look back and be like, hey, I didn't invest in Palantir. I'm a terrible investor. No, he just has his own criteria and he's done incredibly well himself. To each their own, right? We're all wired in different ways. And that's what I'm here to remind you. Just using Palantir as an example, but also here to remind you that as markets did pull back, are you someone that's looking to buy into the dip as markets possibly can recover to new all-time highs? Or do you think that markets are only going to go lower if we begin to see a shift during the Jackson Hole meeting? Again, excited to follow up. This video went a lot longer than I expected, but I just had some things that I had to say, and I wanted to make sure that I made it very clear to understand that it's not a diss against Palantir, as I know money can be made. It's just making you aware of both sides during a critical point. So wish nothing but the best for you. Again, you don't deserve to make money. I hope that you earn it, right? For your ability to see criteria, take action according to your plan, get in, get out, and make your money, and you bounce. So I appreciate your time. Hope that earned a thumbs up. Please consider subscribing. And don't forget, if you guys want to tune into our Jackson Hole meeting this Friday, that's going to be here on our YouTube channel. So just another reason to subscribe. If you want to watch me trade live starting tomorrow, second link down below. Like always, let's make sure that we're in the year on a green note. Take care, team.